Stocks to buy now, Apple stock and Tesla stock, both going through stock splits. Apple 4-1, Tesla 5-1. All the latest stock market news and all the ramifications of these stock splits, how it will affect you and trading in the shares going forward. So let's get started. So first, Apple has gone through a 4-1 stock split, currently trading at around $452. After the stock split, which is a 4-1 split. So for every one share that you currently have, 3 shares will be given to you. And of course, the share price will change. The same holding will now be worth about $113 a share on the current prices. So your holding doesn't increase. Apple is one of the biggest held stocks in the world in terms of retail investors, lots of different people in this. And really the CEO wants retail investors, more retail investors in the stock, which is exactly why he is splitting the stock and making the stock cheaper to buy. So that is you and me on trading platforms like Robinhood, buying shares. Having a $400 price tag is just expensive for people to buy into, which is why these companies, both Apple and Tesla, are splitting their stocks. Now, this can cut out the middleman and there's new money into the stocks, or this should attract new money into the stocks, which is definitely healthy. So the way a stock behaves actually is reliant on who holds the stock. So for example, if institutions are the big shareholders, they can actually influence the company in terms of if they have voting rights, they can actually influence certain things within the company. If retail investors are in the stock, like you and I, we care less about that. And so the retail investor is less likely to do this. When it comes to Tesla stock, this will be split 5-1. So every one share you currently have, there will be 4 new shares. And this means the price, instead of going 3-1 or 4-1, which was actually muted or it was discussed, maybe they'd do this, they chose a 5-1 stock split. Now, Tesla stock will be split on August 31st. So on that day, you will see the share price change, the amount of shares in circulation change. Apple are doing their stock split on the 24th of August. Very close together and definitely not a coincidence. It's not just random that this is happening right now. So Tesla stock trading around $1,500 at the moment. Actually, on the news of the stock split, the price surged, and we'll get onto that in a minute. But obviously, as about $1,500, the price is just too high for retail investors to get into. It's expensive. It is a lot of money just to buy one share. So making the share price come down, having the same market cap just spread amongst more shares, makes it easier and more palatable for retail investors to get into it and to buy it. Now, this increases liquidity in the shares, and it is very healthy for the liquidity and the trade in the shares. So Tesla was up 8% on the news of the stock split, which is insane. And it's actually about 15% up now in after hours as well, all in. So there's 2 things to really know about this. First is that this is on retail interest, and a stock split has absolutely no effect on the value of a company. It's the same company, it's the same market cap. A stock split doesn't change anything. However, it does, as I said, help with retail investors getting in the stock. It also makes the stock appear just more tradable, and that's why people may think, hey, I'm trying to get into the stock. Now, that wouldn't explain the rise we saw, because the stock is still trading at $1,500. So you see a lot of analysts, if you watch TV, read websites, you'll see them saying, this is crazy. Why is the stock up on a stock split? Absolutely no relevance in terms of the fundamental value of the company. But it is more of a psychological thing for Tesla to really be seeking out retail investors, to be making the share price more accessible to retail investors. It's a psychological thing. The company is thinking about the retail investor, and so you're seeing retail investors take that positively and reward the company, more interest in the shares. And of course, if there's more buying interest in the shares, they're only going to go one way. There are also fractional shares that you can trade. If you're on Robinhood, you've definitely seen that, fractional shares, which reduce the price of a stock. For example, Tesla stock fractional shares definitely won't cost 1,500. However, the psychological thing, especially with retail investors, we like to hold a round figure, one share, not a quarter of a share. So this again is another psychological reason why investors actually bought into the stock and forced the price up on a news of a stock split, which, as I said, bears no relevance to the fundamental value of the company. In the history of the stock market, stock splits usually are seen as a good thing. Different times, maybe different amounts of interest are placed on stock splits, but if you're splitting your stock, it means that your company and your share price is usually doing well. It means that the share price has gone up and is really at a level now where you have to make it more accessible again. It usually means that the value of the business, the earnings per share, the revenue are all pretty good. In Tesla's case, that's not exactly right, although they are growing. Obviously, we're yet to really see their earnings going forward, but certainly with the case of Apple, that is more definitely the case, as you can see more specifically with their earnings and their revenues. If we look at the EV space in general that Tesla occupies, you can see different firms in that space. So you have NIO, Nikola Motors stock, and a couple of others as well. Definitely their share prices are much, much lower. For example, NIO trading at about $13 at the moment. Nikola stock trading at around $42. So obviously $1,500 for Tesla just kind of makes it out of reach of a lot of retail investors. And just as a side note on Nikola, the CFO Kim Brady reiterated yesterday, she said, focus on zero emissions class 8 space, which is long haul. We offer hydrogen stations on dedicated routes until density can be built up to about 80% of the overall market. And looking ahead at Nikola Tre, which is another prototype from them, those prototypes are going to be finished by the end of September. 2 Nikola hydrogen fuel cell trucks will be delivered to Anheuser-Busch InBev by the end of next year. And the refuse trucks partnership is set for delivery in 2023. If you remember, that's about 1 to 2 billion in revenue for Nikola. So I think that news is actually very popular. But back to Tesla. Anyway, this news was from Wedbush Securities, who say, we continue to believe EV demand in China is starting to accelerate, with Tesla competing with a number of domestic and international competitors for market share, with the Giga 3, that's the factory, remaining the linchpin of success, which remains the prize that Musk and Tesla are laser focused on capturing. They're on course for 150,000 deliveries from that Giga 3 factory in the first year, which is an important market for them, China. So it looks pretty positive. And in terms of Tesla, they have a battery day in September, which is also a potential news source where the share price definitely could see some action. And if they release some good news there about their future tech products, then definitely there could be some hot action in that stock. Also, the potential of inclusion in the S&P 500 is important because they have met most of the criteria for this. And again, not really too much change in the value of the company by being into the S&P 500. Usually it is a rise in share price, and then after the inclusion, pretty much nothing happens after that because, as I said, being included in an index doesn't change the business fundamentally. And coming back to Tesla stock splits and Apple stock splits, we had Jim Cramer from CNBC also telling us about some other stocks that maybe should go through splits. So he named Amazon, Alphabet, Chipotle, Netflix, Nvidia, Adobe, Costco, Home Depot, Facebook, and Microsoft. Facebook, Microsoft, they're not that expensive, but certainly Amazon up in the 1,000+ range. Very difficult for retail investors to trade. And he's saying that if you just make your stocks more accessible around the $100, $150 range, people can trade them more. But it all depends on the CEOs of those companies and if they want to attract retail investors or not. They may be happy with the institutions holding them like they currently are. Analysts for both Apple and Tesla: 23 buys, 6 holds, 2 sales. This is according to tipranks.com. So price target's around 432, which is what it is trading at now. In terms of Tesla, you've got 4 buys, 13 holds, and 11 sales. So why is that negative? As I said, just the price, the multiple that Tesla trades on is astronomical, and they have to deliver perfectly if they are to keep that momentum, essentially. So with a wrap up, stock splits are good for retail investors. They have absolutely no influence on the fundamental value of a company in terms of its assets, its revenues. All it does is just seek to make the share price more accessible for retail investors to trade. And right now, more retail investors are trading on things like Robinhood and other trading platforms. And some CEOs want that. Some CEOs, I guess like Amazon, who hasn't done a stock split recently, don't really care, but that's obviously up to the company. That is your stock market news and stocks to buy for this episode. Subscribe if you want to see more like this, and I'll see you in the next one.